Welcome to Bloomberg ETF IQ. I'm Scarlett Fu. Katie Greifeld is off for the day. Let's get to the biggest stories right now in the more than $14 trillion global ETF industry. The rally in U.S. Treasuries hits pause as traders brace for a data-packed week and geopolitical tensions. And as Cboe launches the first cash-settled index options tied to spot Bitcoin today, we speak to the exchange's head of product innovation, Rob Hocking. And we explore the potential EM headwinds and tailwinds that the incoming Trump administration will create with Jason Hsu of Rayliant Global Advisors. But first, as always, Eric Bachunas from Bloomberg Intelligence is here with us, the guru of ETF flows, and he's got the latest snapshot of flows. Eric?
Scarlett, thank you very much. I'll do my best. We're in the last month of the year, the home stretch, and the flows are still very robust. They're not quite as gangbusters as right after the election, but they're still very bullish. So IBV, 4.25 billion, that's a lot. The Qs, 2.8 billion. IWM, small caps, 1.4. Still, people can't stop trying small caps. VU, 1.36 billion. VU now has 104 billion on the year, which is just ridiculous. Mortgage-backed bonds and DIA, that's the Dow. When the Dow gets a bid, you know things are bullish. That usually only comes into play when the markets are doing very well. And HYG junk bonds. So bullish all across the board here. Let's look at the outflows. And you can see that it's going to be a lot of Treasury ETFs. Quality, so you saw the IVV. I think BlackRock might have come out of the quality ETF into IVV, which tells you it doesn't really think it needs quality quite as much since the election. So that's probably a bullish sign there. But here you can see a lot of, there's Europe and Treasuries. So I wouldn't call that bearish, except for those. I would call that still bullish US. So again, that's the scene right now. Let's look at the monthly flows because I was kind of surprised. I knew we had a big month, but I didn't know it was the biggest month ever, right? So November, 155 billion into ETFs, and you can see that's a record month. ETFs for the year are now at 985 billion, already into record territory. Probably going to pass $1 trillion by the time we do this show next week. And this number here is astonishing since the election. That's 7.3 billion a day into ETFs because there's only 21 days in November. So that's about double, triple the average, Scarlett. So I don't know when this is going to slow down, but it is still pretty intense out there with the flows.
All right, good stuff, Eric. Joining our conversation now, I want to welcome Anna Paglia, Chief Business Officer at State Street Global Advisors. The overall firm had about $4.7 trillion in assets under management at the end of the third quarter. And by the way, it is the world's third largest ETF issuer. Anna, great to see you.
Very good to see you. Thank you for having me.
So Eric mentioned how the flows are no longer going gangbusters. They've kind of moderated since the days right after the election, and you can kind of see that with the price action as well. Certainly with the S&P 500, it's making new highs, but the size of the gains have really diminished. And there's a sense of, feels like nervousness over what's going to happen with the new administration and its policies. What are you seeing in equities? Is the post-election rally, has it seen its best days and it's kind of fading?
Well, the flows are moderating a little bit, but it doesn't mean they have peaked. We still see a lot of excitement, new money coming into the industry. Eric mentioned that about $160 billion of new money that flow into the industry in November. At the beginning of the year, we were very bullish about the ETF industry. We looked at $1 trillion as being the new target for flows, and now we are just looking at the new number being 1.1 or 1.2 by the end of the month. So still bullish about flows.
And you are heading up an ETF division that's within a bigger asset manager. And for people watching, what's that like when they see flows like this? Do they just hand you the keys and say do whatever, or do you still have to fight that fight internally that like ETFs are the future? I need more resources.
Well, I wish that there was such a thing as handing out the keys. There are no keys here. So I think that regardless of the wrapper, I mean, let's remember that ETFs are a technology. So we always look at the best technology for our clients. We look at the content for that technology. We see incredible growth potential for ETFs, obviously. But there are also other vehicles and other legal wrappers that also play out really well for different investor bases.
So, Eric, when we look at the most actively traded ETFs by value, SPY is almost always near the top every single day. But you were bringing up IVV, how it saw a lot of flows over the past week. It feels like the other ETFs that track the S&P 500 are kind of catching up.
Yeah, I'm sure Anna knows this as well as anybody. You probably have a clock on your wall. How long until IVV passes SPY? Honestly, it could be VU. But the two of them are just hot on the trail. Now, SPY still has, I think, 90% of all the liquidity amongst the three. I call them the three amigos. But they're probably going to pass you within a year unless you can pull a rabbit out of a hat. Can you?
Well, I don't think that there are rabbits to pull out of hats. Otherwise, we would have pulled it already. I do believe in the power of the S&P 500, but I also believe that SPY is still the largest. It cracked the $600 billion recently. It's still the largest. It's the most traded. It's the most liquid ETF out there. Are the others catching up? Yes. How long is it going to take? I don't know, but I don't think that SPY is going to lose its leadership or supremacy regardless.
Yeah, SPY is the OG here. I mentioned State Street is the third largest ETF issuer. Where's the opportunity set the largest for State Street when it comes to either asset classes or niche pockets of the ETF universe that have growth potential, but not enough products yet to satisfy all the retail investors out there?
Well, if you look at the products, the core is really strong. State Street Global Advisors is still one of the leaders when it comes to low-cost beta. And looking at new products and new opportunities, we see opportunities in new asset classes like cryptos and digital assets. Fixed income is also a focus for us. And, opening the doors to other asset classes that today are not really available to retail clients.
There's a lot to unpack there. Let's start with the crypto. So you're the GLD people. I would think you'd have a spot Bitcoin ETF. We looked, the average spot Bitcoin ETF has like 7-8 billion in assets. That is so out of whack. Most ETF categories, the average ETF has like 400 million. So there's clearly a lot of demand there and not a lot of supply. What's your plan in that space?
We have just launched the 3 digital assets ETFs in partnership with Galaxy. We are really bullish about digital assets, and it's easy for people to assume that digital assets equal Bitcoin or equal crypto, but the asset class is much bigger than that. So are we looking at launching at a spot Bitcoin ETF? Not now. The market is saturated. We have over 10 or 13 spot Bitcoin ETFs right now. This industry does not need another one. But in the long run, it's definitely part of the roadmap.
Okay, so it's not off the table that you come out with your own Bitcoin ETF. I think about asset classes, Eric, and last month, Bridgewater partnered with State Street to launch a Ray Dalio's all-weather strategy in an ETF wrapper. These hedge funds extending into ETFs has definitely become a thing. Yeah,
and even before that, to me, the earthquake filing was Apollo, right? And, this is the holy grail. How can you make private assets, private equity, private credit, and put it into a publicly traded ETF? Whoever can do it stands to make a lot of money. This is, and I love my races. To me, this is the new Bitcoin ETF race, which is who can get the privates into an ETF. You guys, I think, really fired the first shot because Apollo will provide the liquidity backstop. That's huge. What's your main motivation here? Is it to expand into that private area or alts in general?
Well, the main mission of the ETF industry is to democratize access to financial markets. It's still too early to talk about these products, but democratization is definitely the pillar behind these filings.
And strategic relationships with these alt asset investing firms is kind of at the heart of it then.
Correct.
All right, so more to come then.
More to come.
Anna Paglia of State Street Global Advisors, thank you so much. We tried to get her to say more, but she's not speaking up on that just yet. All right, we'll get her next time. Coming up, we're going to speak to Cboe's Rob Hocking on the new options product related to Bitcoin. That's the key there. This is ETF IQ on Bloomberg. Welcome back to Bloomberg ETF IQ. I'm Scarlett Fu. It's time for the ETF brief. The Cboe today launching the first ever cash-settled options product related to spot Bitcoin. This follows the listing of Bitcoin ETF options on the NASDAQ about 2 weeks ago. And all of this is part of an effort to meet investor demand and increase access to crypto derivatives as we see the price of Bitcoin climbing and hovering around $100,000 and investors position for a crypto-friendly regulatory regime in Washington. All right, joining us now with more on the Cboe's new product is Rob Hocking. Rob is head of product innovation at Cboe Global Markets. Rob, good to see you. Walk us through how your product works, because unlike the NASDAQ product I was just mentioning, these are not options on a Bitcoin ETF. You've created a spot Bitcoin ETF index. So is the index market cap weighted? Is it equal weighted? Does it include all of the spot Bitcoin ETFs?
Great questions. Yes, we're super excited about the launch of this product this morning because it really brings together some of Cboe's core strengths. Our ETP listings business, along with our index creation business, as well as our core franchise and the derivatives index trading business. And so the index is created, yes, it's modified market cap weighted. It uses 10 ETPs in the index calculation. The top 6 can't make up more than 60% of the product, and then that leaves obviously the remaining names to make up the bottom 40%.
So, Rob, let's talk about why somebody would use these over just options on the ETFs. We waited like 9 months to get options on IBIT and the rest of them. And now they're here, and IBIT's options are liquid. They traded, I think, 1.3 billion notional the first day. That's amazing for day one. So why not just use the ETF versus the index options?
Well, I think we're trying to build an ecosystem here, much like the traditional market and equities was created. You had the single names first, then you had the indices created that offered you maybe a more diversified footprint or more diversified product. And I think much the same here as we have the individual, like you mentioned, IBIT, along with the others. And then you introduce the index product. Our index product, like we mentioned, is cash settled. It's a larger notional contract. So whereas the individual names, let's call it, are around a $5,000 notional, our mini contract is around 4 times that at 20,000. And then our index, our standard product, is around 40 times an individual ETP at around 200,000. So the combination of cash settled, larger notional, we also introduced flex options on these index contracts, really start to target that institutional community. Think ETP issuers that want to build a defined outcome space where they're looking for, kind of the bespoke optionality that Flex provides, overlaid with a bigger notional size contract to really help build up the ecosystem.
Okay, so that's the sophisticated investor base, but really this new product is an indirect way of engaging with or dabbling with Bitcoin. Does that mean the target audience for these index options is mainly those who are unable or unwilling to directly hold the asset, directly hold Bitcoin?
Yeah, I think that's right. It's very similar to the ETPs themselves. I think we're looking to build, like I mentioned, that ecosystem up. And so with this, you have an SEC regulated product. It sits in your securities account. It's centrally cleared by the OCC. All of the things that you would say, like, traditional market comforts offered in the Bitcoin asset class.
And if we're going to look at the options on IBIT, what can they tell us so far about how people are feeling towards Bitcoin? Because one thing I did is I looked on the terminal here, and you can see that it looks like people are pretty bullish. Like they're buying options that are sort of call options that are sort of out of the money. And there's even a couple call options at $100, which would mean Bitcoin would double because IBIT's $54 right now. And some of these are maturing pretty quickly, like February 25. What's going on there? Is that just mega bullishness?
Yeah, I think it's speculation, it's risk management, all the different things that options afford you. And I think the market is anxious for that. As you mentioned, it's growing quickly. I think many like the idea of a regulated product, something they're familiar with that can sit in their regular account, and securities account, and having access to that, I think, is exciting for people. I think you'll continue to see kind of this demand grow. And that's one big reason why we wanted to bring out the index product, is listening to our customers, listening to our ETF or our ETP issuers saying, you have this traditional defined outcome market. A lot of investors have found a lot of utility in using products like that. They want exposure to Bitcoin. And so how do we marry the two? How do we bring the two together? And so with the creation of this index product, it's really kind of facilitating that growth and allowing some of these ETP issuers to take a traditional strategy that maybe sat in an equity portfolio and now overlay it on Bitcoin, which I think is super exciting.
Okay, let's look at what's ahead. So one of the things we just saw was Cboe put in 19B4 for Solana ETFs, and the clock hasn't started yet, but if the SEC acknowledges these, it puts us on a clock of 240 days. The envelope keeps getting pushed, and you guys are one of the pushers of this envelope What do you see here? Could we be talking to you in a year from now and see options on Solana ETFs?
Obviously, it's possible. I think right now, obviously, we're waiting on regulatory feedback on that product, so I won't really go into or comment on that one specifically. But yeah, I think the market is looking to evolve and looking to evolve quickly, and I think that's what makes it exciting for us. We'll continue to engage with our customers and continue to look for the feedback on where the risk products that people want, and then we'll look to design those products. And we'll, like we mentioned at the start of the call here. We have the ETP business, we have our indexing business, we have our options trading business, our underlying business. We're going to continue to use those core strengths to build out this marketplace and give investors access to what they want access to.
All right, Rob Hocking of Cboe Global Markets, thank you so much. Real indication of how the crypto industry has kind of gone into a time warp, hyperdrive growth here in anticipation of the new administration. Now, still ahead, we're going to drill down into emerging markets with Jason Hsu of Rayliant Global Advisors. Next, this is ETF IQ on Bloomberg. This is Bloomberg ETF IQ. I'm Scarlett Fu, and it is time for today's drill down where we focus in on one ETF. Eric, what is it?
Scarlett, today we're looking at RAYE with an E. This is the Rayliant Quantamental Emerging Markets ex-China Equity ETF. So this word should cue you into the fact that this is going to be something like a smart beta ETF, and it is, right? It's looking at big data and quant models to try to select stocks in the emerging markets that aren't China and try to outperform, right? That's the main goal here. It came out about 3 years ago. 88 basis points is the fee and is actively managed, but again, uses quantitative models, which are active in nature, but a little more rules-based. So let's look at the allocation here by region. And so if you don't have China in your EM, it gives you a lot of budget to spend elsewhere, because China is 20, 30% of most EM indexes. So you can see here's where you're going to spend, this ETF spends a lot of that budget. Taiwan, India, South Korea, South Africa, all these are going to be largely overweight. So that's what you get when you don't have China. So let's look at the performance of this since it's come out. It's actually, like I said, it's got a track record now, and it's pretty good. Look, it's up 6.87%. Now, this isn't a lot compared to the US, which is a problem we'll talk about in a minute. But this is EM, so it's beating EM by 12.4%. And this is EMXC, which is EMX China, iShares' popular sort of beta ETF that just does EM, no China. So if it's beating this, which to me is probably its real benchmark, that's a good sign. So it's doing its job here. The problem is this number here, Scarlett, so you're outperforming, but getting people to pay attention to emerging markets, I think, is one of the challenges here, given how good the U.S. has done.
Yeah, very well said. Okay, well, joining us right now to talk more about this ETF is Jason Hsu. He is Chairman, CIO, and founder of Rayliant Global Advisors. And what Eric was really telling us about was this U.S. exceptionalism that has pervaded the market. What is the sales pitch to investors to take a second look at EM ex-China right now, especially when there's so many concerns about what an incoming President Trump will do when it comes to tariffs?
Well, Charlotte, first and foremost, it wasn't always the case that U.S. outperformed every other region and country.
Really
right?
feels like it.
It's been forever, no?
It's been almost 20 years, right? But there was a stretch from really 2000 through to 2009, a 10-year time period where EM actually beat the U.S. by about 9% per annum. So it's quite phenomenal. So it's about identifying catalysts for when that might happen again.
These are some crazy stories you're telling. No, there's no way.
It's a long time ago.
Right.
It's a long time ago.
So let's say EM starts kicking in. You've got all these countries that I went over that are overweight. When you take that China budget that you don't have to spend, how do you figure out how to allocate it? Are you bottom up, or are you going, top down from the countries?
We're very much, bottom up, but it's going to gravitate to a lot of the macro theme that you would find obvious, right? Taking out China, a lot of that is about U.S. friendshoring, and that's probably the biggest catalyst when you think about EMX China. Look, with President Trump 2.0, a renewal of the U.S.-China trade war, big tariffs on China, it means a lot of Chinese factory operators, actually a lot of Chinese factory operators are Korean, are Taiwanese, right? They're thinking of moving manufacturing back to Taiwan, back to Korea. Some are moving into Japan. Now it's become a low-cost operating region. We're seeing a lot of money actually going into Thailand, Malaysia. Mexico. So these are friendlier borders. And so if you can sort of take the Chinese cost efficiency, move it into an area where the U.S. traditionally have better relationship with, phenomenal opportunities. Think about it. Just 5% shift of Chinese export to one of these economies could actually represent a 50% increase in overall export. So phenomenal opportunities.
But I look at Taiwan, for instance, and Taiwan companies make up 17% of the fund, and you're overweight TSMC at 15%. Both TSMC and Hanhai have several factories in China. So there's a lot of indirect China exposure. What is the macro theme, the specific macro trend that makes Taiwan appealing, even as the China story is very tenuous?
So if you look at, say, TSMC, you look at Honghai, and I think Honghai is particularly interesting, right? Because one of the big stories of the last 2 years is Honghai has been exploring, making iPhones in India, making iPhones elsewhere. Now, of course, initially, it's not going to be the same cost effectiveness. Clearly, they're not making the latest version of iPhone in India. But it takes a few iterations before you get really good at it, right? So these contract manufacturers that the Taiwanese, the Koreans are particularly good at, these massive international enterprises, they have the flexibility of moving across borders, moving to the best border now in terms of trading with the U.S. So we're very bullish on these sort of multinational contract manufacturers.
And when we look at, you picked ex-China, it is a hot trade, but the Chinese government, the national team, just bought $90 billion worth of ETFs to do some QE style, which made the market spike up pretty quickly. Some foreign money went in there. It's kind of gone uneven since then. But why do that if the government is there to sort of try to prop up the market? Wouldn't you want to own China?
Yeah, so Eric, for us, we've been talking about an ex-China product for a long time, not because we want to X out China, but from a diversification perspective. Like Eric, you mentioned, 30+%, at the time it was like 50% of EM was actually China. You don't get a lot of diversification when so much of your money is allocated to one economy. So our advice is to have EM ex-China and have a separate China bucket. If you're contrarian, I think you go big on China because it is so cheap and you got a national team on your side. Now again, if you are more sensitive to political optics, you might underweight. So this gives you flexibility. This is not about being anti-China. It's about having that flexibility depending on your governance structure.
All right, good stuff. Jason, always a pleasure. Wish we had more time with you. Jason Hsu of Rayliant Global Advisors. Thank you so much.
Thank you.
And you can read all about this drill down, plus the latest in the ETF industry when you subscribe to our weekly ETF IQ newsletter written by none other than Katie Greifeld. That does it for Bloomberg ETF IQ. I'm Scarlett Fu here with Eric Balchunas, and this is Bloomberg.